Welcome back to the channel, guys. There was a lot of feedback in the previous videos I did for WINC, LDGG, and SDIP and the JP Morgan funds, and obviously raised that it might be worth doing a bit of a comparison between these popular funds. A lot of you wanted me to do that comparison, so I thought I would cover that off in this video today. Now, again, obviously, I've done my best to get the most accurate data. As always, I'll do my best to cover this off. But let me know, guys, if you want me to continue this journey. I think it'll be a very interesting one. Let's get into the video. So if we start off with WINC, the iShares World Equity High Income, it's a systematic strategy utilizing quantitative models and ESG criteria paired with derivative overlays to maximize income while maintaining global equity exposure. You then have LDGG, the new LNG Global Quality Dividends, a high conviction dividend growth strategy focused on quality metrics, targeting sustainable payouts and capital compounding across 950 plus holdings. We then have the JEPG, which is the JP Morgan Global Equity Premium, defensive income generation through an active ELN covered call overlay designed to suppress volatility and pay consistent monthly premiums. And then we have SDIP, the Global X SuperDividend, an aggressive yield capturing targeting the top 100 dividend paying equities, globally providing immediate cash flow at the expense of sectorial stability. So if we were to look at this now from a key fund metrics and comparative data perspective, the benchmark for WINC is iShares World Equity High Income Index. For LDGG, it's the FTSE Developed All Cap Dividend Growth with Quality Index. For JEPG, it's the JP Morgan Global Equity Premium Income Active Index. And for SDIP, it's the Sol Active Global SuperDividend Index. If we look at the expense ratios now, it's 0.35 for WINC, 0.29 for LDGG. JEPG, it's 0.35, and for SDIP, it's 0.45. When we talk about inception dates, it's the 22nd of March 2024 for WINC, 12th of January 2026 for LDGG, so it's a brand new fund at the time of recording. JEPG is 30th of November 2023, and SDIP is 15th of February 2022. In terms of stock exchange coverage, it's pretty good across the board. There are obviously typically the pound versions and the dollar versions of these, but you can get them on LSE. Now, broker coverage is a completely different story. What I would recommend is you get it added, put a request in with your broker, whoever that happens to be, and see if you can get the funds added. Most of these will probably be available apart from probably LDGG, which will be the one that most people probably struggle to find on their broker. I just want to do a bit of an analysis on cost versus current yield. And what you'll typically find is the higher the yield that it's producing, typically the higher the expense ratio. And that's typically because they're more actively managed than passively managed. So if we look at WINC, its yield is around 9%, 9.5%, and it has an expense ratio of 0.35, as we said earlier. LDGG, now it's a brand new fund. I'll try to do some research on it, but it's not clear what the yield is likely to be. But I've got a feeling it will probably end up around 4%. And I know a lot of people are hoping this will be the European equivalent of the US SCHD. So its expense ratio is 0.29%. JEPG is 7.8% as a yield and has an expense ratio of 0.35%. And the most expensive from an expense ratio is SDIP at 0.45% and a yield of 8.75%. Now, those yields are at time of recording, so they could be higher or lower by the time you watch this video. And your yield on cost, more importantly, is what you should probably be caring about. In terms of the kind of risk reward, I just wanted to look at it, the annualized returns against volatility, and using the MSCI All World benchmark to provide a baseline. And we can see here that WINC and SDIP have successfully bought higher returns by accepting equity-like volatility, both outperforming the defensive JEPG in the recent bull run. From a benchmark perspective, noticing that SDIP sits in the upper right-hand quadrant, effectively capturing an alpha relative to the broad all-world index, while JEPG acts as almost a pure volatility dampener. If we start to look at the trailing total returns percentages. Now, these are total returns, so this is including the distributions. In terms of the 1 month period, WINC is negative 0.24%, LDGG is negative 1.26%, JEPG is positive 2.21%, and SDIP is positive 0.58%. Now, obviously, there's a lot of turmoil in the markets right now with what's going on with the geopolitical situation. So markets have taken a bit of a hammering. The 6 month period for WINC is around 8.2%. Now, obviously, LDG is new, so there is no other data until we get to the inception. JEPG is 6.82%. SDIP is almost 13.5%. The 1 year figures, WINC looks good at 18%. JEPG is around 3.67%. And SDIP is 29%. If we start to look at the year-to-date numbers, we can see that WINC is 2%, JEPG is 4%, and SDIP is 8.67%. Since inception is where things start to get interesting. So bearing in mind the inception dates for all of these funds are different. So they've gone through different bull and bear cycles as well. WINC has performed very well at 26.68%. LDGG's very new, 5.66%. JEPG is almost 20%. SDIP, which is interesting, is only 7.3%. So despite it doing very well in the 1 year since inception, it's actually been the lowest performer almost if you exclude LDGG out of the mix. And guys, if you're enjoying this content, a like to the channel would be appreciated. And if you haven't already subscribed, please do. We're getting very close to that 1,000 subscriber milestone. Let's see if we can try and get to that in the next month or two. So again, just bear in mind, as I said, this is from the inception dates. So if we just scroll back up very quickly to look at these, we can see that WINC was from 2024, JEPG was from end of 2023, and SDIP, which is the oldest out of all of these, was February 2022. So there isn't a massive kind of gap between them. You could argue the gap between JEPG and WINC is actually quite close, but SDIP has probably got 2 years gap between WINC and SDIP. So just bear that in mind when we talk about the sort of since inception numbers. And again, depending on when you bought in is very important, and the yields that you're getting are obviously relevant in the returns equation. So it also depends on whether you dripped back into these funds or you distributed them across other funds within your portfolio also matters. So again, I just thought I'd put this in for perspective and comparison. So if we look at it from a full strategic pro and con perspective now, so WINC, it has a yield of around 9.42%, which has been fairly stable, strong capital appreciation. It's got a smart beta ESG overlay, which improves long-term quality. It does have a higher volatility at 12.93%, which requires a higher risk stomach. It is quarterly distributions, which may not suit people who prefer the monthlies. If we look at LDGG, the new one, most competitive fee structure at 0.29%, massive diversification across 952 positions, which minimizes single stock risk. It's more focused on the dividend growth and protecting against inflation. The cons are it's obviously a brand new fund, only came out in January, lacks long-term performance data, lower starting yield than income first active funds. However, as I said, if you compounded that over time on yield on cost, it could actually work out in your favor because it is working on quality dividends, which are likely, those companies normally increase their dividends year on year. If we look at JEPG next, it's the best in class when it comes to risk suppression. Its volatility is only 9.43. It's got highly reliable monthly cash flows at 7.8%. Significant institutional backing and a liquidity. The cons are it is a covered call strategy which caps upside. It's poor performance in strong bull markets, and its total returns can significantly lag the broad market index. We then have SDIP, the Global X SuperDividend. So this has a stellar recent momentum of almost 29% in a 1-year return. It maximizes global diversification outside the US. It's predictable monthly payments based on 100 highest yielders. The cons are it's obviously higher management fees than all the others, and its historical propensity for sharp drawdowns during credit shocks, due to the nature of what it's investing in, is a risk factor. So, in conclusion, the choice between these ETF depends entirely on your investor's timeline and risk tolerance. When we benchmark against the MSCI All World Index of 22.5% return, along with 11.2% volatility, the income-focused ETFs reveal their specific utility. WINC remains a top-tier choice, delivering nearly double the yield of the global markets while capturing significant capital upside. If we then look at JEPG, it acts as a purely defensive alternative. Its covered call strategy suppresses volatility and pays a reliable monthly yield, but investors must accept that it sacrifices capital appreciation during those strong bull runs. We then have SDIP, which demonstrates explosive recovery potential, outperforming the global benchmark over the last 12 months. However, its historical drawdowns remain a critical consideration for long-term investors. And then finally, the new kid on the block, LDGG, is the strategic play for those prioritizing compounding and quality with the lowest fees and the highest diversification. It offers the cleanest exposure to global equity premium without capping constraints. Now, I think obviously LDGG is new, so let me know in the comments if you want me to continue this analysis over a longer period of time. I think that's where we'll probably find out the true factor of how it really plays out in the longer run. And let me know in the comments if you actually own any of these or all of these. Potentially, they're all doing different things within a portfolio, arguably, and we can see that in the numbers and in my previous videos. Again, don't forget to like and subscribe if you haven't already done so. And if also you've not joined us in the Discord yet, there is a Discord of like-minded investors. Come join us in there as well, and we can start talking about all these new funds that are coming out. And again, if there's anything else you'd like me to cover, drop that in the comments or put a post in the relevant section in the Discord, and I'll do my best to get to it as soon as I can. Thanks a lot, guys. I will catch you on the next one.